In an announcement that is shaking the entire financial and crypto world to its core, Ripple CEO Brad Garlinghouse has confirmed that XRP is positioned not just to compete with Bitcoin, but to overtake it entirely, setting its sights on a staggering $640 trillion global market cap. And when you pause and let that number sink in, you begin to realize the scale of the tectonic shift Ripple is forecasting, because this is not simply about XRP replacing Bitcoin as the #1 digital asset. This is about XRP evolving into the backbone of the global financial system itself, absorbing the trillion-dollar payments industry, the quadrillion-dollar derivatives markets, the emerging tokenized real estate sector, supply chain finance, central bank digital currencies, and global remittance rails, effectively becoming the digital bloodline of money that flows through every corner of the world economy. And Garlinghouse did not mince words, declaring that the roadmap is already unfolding, and XRP's infrastructure, speed, and utility are what position it leagues ahead of Bitcoin, which, despite its first-mover advantage, has increasingly been criticized as a store of value, with limited use cases beyond holding or speculative trading. While XRP has been built from day one to move value frictionlessly, near instantaneously, and at scale for institutions, governments, and corporations across the globe. Ripple's CEO emphasized that XRP is uniquely designed to solve real-world problems that no other digital asset can address at scale, highlighting that Bitcoin requires massive amounts of energy consumption, lacks scalability, and functions primarily as digital gold, whereas XRP, with its consensus algorithm and eco-friendly design, can handle thousands of transactions per second, with settlement finality in seconds and near zero cost per transaction, a feature set that global banks, payment processors, and even central banks are now recognizing as essential in the move toward tokenized economies and digital settlement layers. And this is why Ripple is now positioning XRP as the logical successor to Bitcoin, not just in terms of market capitalization rankings, but in terms of being the primary liquidity provider for global value transfer. Garlinghouse pointed to Ripple's extensive partnerships and growing institutional adoption as undeniable proof of XRP's momentum, noting that RippleNet and on-demand liquidity services are now integrated into dozens of countries' banking infrastructure, powering real-time remittances across Asia, Europe, the Middle East, Africa, and the Americas. And this is not theoretical transactions worth. Billions are already moving through Ripple's rails, with XRP providing the liquidity behind the scenes. And when you consider Ripple's engagement with hundreds of banks, financial institutions, and even government entities, you start to see why XRP has a path that Bitcoin never truly had, because Bitcoin remains too slow and too costly to handle institutional-grade settlements, while XRP is purpose-built for precisely this level of adoption. The mention of a $640 trillion target market cap was not an offhand remark, but a direct reference to the total addressable market Ripple envisions for XRP, which includes tokenized derivatives, real estate, securities, commodities, foreign exchange settlements, and the cross-border payment system. And for context, the derivatives market alone is estimated to be valued at more than $1 quadrillion, meaning even modest penetration of this market by XRP could catapult its valuation to unprecedented heights. While adding in the global remittance market, which processes over $700 billion annually, and the $6 trillion in daily forex settlements, the case becomes overwhelming that XRP is structurally designed to capture significant market share in multiple overlapping financial sectors, creating exponential compounding demand that could dwarf the speculative cycles that have driven Bitcoin's price over the years. Garlinghouse stressed that Bitcoin has had its run, and while it will remain an iconic pioneer of the crypto movement, the baton is being passed to utility-driven assets that actually solve inefficiencies in the financial system. And XRP stands at the top of that list, positioned to become the global settlement layer for the digital economy. And he underscored this by reminding everyone that the XRP ledger is far more advanced than most people realize. With decentralized exchange functions, token issuance capabilities, NFT integration, smart contract interoperability via hooks and sidechains, and sustainability that makes it attractive to ESG-conscious investors and institutions. And when all of these factors converge, you end up with a scenario where Bitcoin's dominance is not only challenged but ultimately eclipsed by XRP, as the world demands utility, speed, and scalability over the digital gold narrative. Market analysts are already running scenarios based on Garlinghouse's bold projection. And while skeptics point out that a $640 trillion market cap would make XRP the most valuable asset in history by far, proponents argue that this is precisely the point, because the financial system is undergoing tokenization at an unprecedented rate, with BlackRock, Vanguard, Fidelity, and State Street all signaling aggressive moves into tokenized markets. And if XRP cements itself as the liquidity bridge underpinning these flows, there is no mathematical ceiling to its growth, because it would become not simply a crypto asset, but the very infrastructure of finance itself, meaning its valuation must scale in tandem with the size of the global economy it serves, and with digital assets increasingly being recognized by governments as strategic reserves, the trajectory of XRP could accelerate even faster than most expect. Garlinghouse ended by sending a clear message to both retail investors and institutions. Do not underestimate XRP's path forward, because while Bitcoin has dominated headlines for over a decade, the real story of blockchain's integration into the heart of finance is only just beginning, and XRP is positioned at the epicenter of this revolution, not just as another token, but as the settlement standard for the digital age. And when you align Ripple's technological capabilities, its partnerships, its legal clarity post-SEC battle, and the emerging wave of central bank integrations, you begin to realize that the talk of overtaking Bitcoin is not simply bravado, it is the logical conclusion of a strategy that has been in motion for years. And, if Ripple succeeds, then XRP will not only dethrone Bitcoin, it will rewrite the very definition of money, liquidity, and global value exchange, potentially anchoring the entire $640 trillion economy of tomorrow. At those levels, XRP would skyrocket to $10,989 per coin, and while that number may sound unimaginable at first glance, when you understand the mechanics of what is unfolding through Ripple's institutional XRP Ledger Asset Program, powered by the integration of the real token framework, it suddenly becomes less of a wild fantasy and more of a mathematical inevitability, because we are talking about a systemic injection of $228 trillion into the XRPL, a tidal wave of liquidity and tokenized assets that would dwarf anything the digital asset market has ever seen before. And this is not speculation without substance, but the direct result of Ripple and its partners creating the rails for institutional-grade tokenization at a scale the world's financial markets require. The XRP ledger, designed for speed, low cost, and scalability, has already proven itself as a payment settlement layer. But what is happening now goes far beyond payments. It is the convergence of global tokenization across real estate, sovereign debt, commodities, equities, derivatives, and trade finance, all being channeled through a singular interoperable network, and that network is XRPL. The real token, positioned as the institutional on-ramp into tokenized asset flows, is set to be the key bridge that standardizes, securitizes, and delivers compliance-ready instruments for banks, investment funds, and even governments, creating a unified highway where trillions of dollars can move seamlessly, instantly, and with settlement finality. And at the core of this system lies XRP, the neutral bridge asset that ensures liquidity can flow between tokenized assets of all kinds without friction. When you inject $228 trillion in value into a ledger designed to settle instantly and globally, the market must absorb this with pricing that reflects scarcity and demand, and given XRP's capped supply of 100 billion with a significant portion locked in escrow and unavailable for immediate circulation, the mathematics show that price per token must escalate to extreme levels to support the sheer magnitude of liquidity being funneled through the network. $10,989 per coin is not some random hype figure. It is derived from realistic liquidity modeling when one overlays institutional adoption, global settlement layers, and the gradual phasing out of outdated pre-digital systems like SWIFT, CHIPS, and correspondent banking. What amplifies this further is that the XRPL is uniquely suited for tokenization, because it has no mining, negligible energy consumption, and deterministic finality, making it regulatory-friendly, ESG-aligned, and enterprise-ready features that institutions, particularly those managing trillions in assets, require before fully committing to blockchain technology. Ripple has spent over a decade positioning itself for this exact moment, building corridors with central banks, winning over regulators in key jurisdictions, and establishing credibility with enterprises that have been quietly waiting for the legal and technological clarity to act.